In this video, we're going to talk about your trading plans and the types of records that you're going to need to keep if you want to be a success in this business. Now, believe me when I say this, the trading plan and the records that you keep are going to be a big factor in whether or not you're going to be a success as a trader. Now, that might sound really stupid, but take it from me, from the people that we've trained and from our own trading, we found that we are more successful when we're more organized, and by the same token, our members are as well. So those members who keep good trading plans, who are organized, who do treat this as a business, they tend to be the ones that have success and go on and trade profitably. Whereas those who approach this as some sort of a game or some sort of a hobby, they're the ones that end up losing money, and they kind of fall by the wayside and we never hear from them again. So this is a very, very important video. Please don't skip it. You may feel like you've heard this 1,000 times before and you know what's going to come up, and perhaps you have, but just give it a chance and go through the video, because you never know, there may be one or two things that you'll pick up from this that will help you for the future. Now, there are three types of records or plans, if you like, that we're going to talk about in this video. The first is your individual trading plan, which is going to be your plan about the trade that you're about to take. So the reason for taking it, the rules, the entry price, all of that kind of good stuff. That's all going to go into your individual trading plan. We're then going to talk about your trading business plan, which ultimately is your plan about your whole business. Now, you may sit there and think to yourself, my whole business, that doesn't make any sense. I'm only trading here. What does this have to do with business? Well, if that is your sort of thought process, I'm asking you, please stop that now, because that is a massive reason that a lot of people fail at this. They look at trading as being some sort of, some sort of a game or a hobby, and they think they can just roll up to the screens and turn on their trading platform and take a trade and everything will be fine and wonderful. But to be honest with you, that's really not the case. If that's the way you're going to treat it, then unfortunately it's going to cost you money. Okay, as I mentioned to you just now, the members of ours that are most successful at this are the ones that do actually treat it as a business. They see this as a serious business. They see this as being the place where it's going to give them everything that they want in the future, and they take it very, very seriously. And because of that, they end up doing very well. Okay, so we will be talking about your trading business plan, and that's ultimately as I said, your global plan. So it will contain everything from your rules for trading, your goals, the sort of money that you want to make, all of that kind of good stuff will go into your trading business plan. And then finally, we'll talk about your trading records. Now, the individual trading plan is your plan for, the very next trade. Your trading business plan is for the next few years, how you're going to go about your trading, all of that kind of good stuff. And your trading records are the things that you're going to use to look back on your trading, okay? So your trading records are the records of the trades that you've taken, the entries, the exits, how you felt about the trade afterwards, all of that kind of good stuff is going to go into your trading records. So they are the three types of, or the three administrative, let's say, the three administrative documents that we're going to talk about during this video here. So let's start off by talking about your trading business plan. Now, your trading business plan is going to help you define clear, achievable goals from the outset. Now, why do we need goals? Well, ultimately, how do you know you've achieved your goals if you never take the time to sit down and define them? What happens to some people is that they are wildly successful or mildly successful, however you want to put it, but people are successful, but they never feel like they're a success because they don't know how to measure their success. Does that make sense? Whereas if you define clear, achievable goals, then you can kind of tick those goals off when you get to them, and then you've got a way of measuring whether you're a success or not. So you're not doing something broad like saying, I want to trade and make money, because, okay, so you make money this week. Does that mean you're a success? You're going to make money next week. Does that mean you're a success? But then you lose money 3 weeks later. How do you measure this? Whereas if you write down clear, achievable goals and goals that can be measured, so things like, I want to be profitable and I want to be earning enough money month on month to supplement my income by, let's say, 20% by the end of the year. That's something that you can measure. So if you get to the end of the year and you're not doing that, Maybe you've done it for a month, but that doesn't really constitute as being able to do that consistently. You know you've got something to measure that against. Then you can say, well, I'm not doing 20%, but I'm doing 10%. Fair enough, wonderful. If you're contributing and you're supplementing your income by 10% of your actual salary, then at least you know that you're doing something towards it. Do you see what I mean? So your trading business plan has to define clear, achievable goals from the outset that you can measure. All right, your trading business plan, it also helps you to manage your expectations. It helps you to define what's realistic. So you probably, well, everybody, or 90% of the people come to the market because they believe that it's going to be a get-rich-quick scheme. They can put in a little amount of money and they can become a millionaire overnight. All right, now, maybe this happens to one or two very, very lucky people, but on the whole, that's not the way things work. So you need to manage your expectations, and you need to manage them not necessarily from a couple of trades in or anything like that, but you need to manage them when you've just had a run of 1 or 2 or 3 months where you've been really, really successful. Maybe you've just kind of taken 90% of your trades have made you money, and you sit there thinking to yourself, well, you know what, this is really easy. I'm going to up my risk because I'm hardly ever wrong, and that way I can make more money. Now, what tends to happen to people is that when they do that, they then end up hitting a losing streak. And guess what? Because they've upped their risk size at that point, they lose their money twice as quickly as it took them to make it. So, and that has a negative impact on so many other levels, which we'll talk about in the trading psychology lesson. But just believe me, it's not a good place to go. So managing your expectations in your trading business plan provides you a central place where you can go back to and read it, every week, every month or whatever. And it just will help you to keep in check. So even if you have had a wildly successful month, you can look back at your trading business plan. You can say, okay, I've done this right. I've done this right. I've done this right. Yes, I've had a good month. I've done better than I thought I would have done. But I need to remember that the markets aren't going to give me 50% every month. So let's just relax a little bit and continue with my trading plan. Okay. So it provides you, as I just mentioned, it provides you a central place to define your trading system, your rules, your money management, all of that kind of good stuff. At the moment, we're not talking about your individual trading plan. At the moment, we're talking about your trading business. So like any other business plan, you want your goals, what you're looking to achieve, your expectations, your rules, and any other sort of criteria that's going to globally control your trading business. And then lastly, remember that this can be altered with experience. So your trading plan is not a static document. As you get more experience in the markets, you'll learn new things. You'll want to add new things to your trading plan. Maybe you want to take some things away, whatever it is. But ultimately, you'll find that the trader that you are today is going to be very different from the trader that you are in a year's time or 2 years' time or 5, 6, 10 years' time. I'm not saying necessarily that you'll trade a different system, because you'll find that you like the system and it's something that suits your personality. But you may change a few other things, like maybe your expectations, your goals will change. So as you start to achieve your goals, new ones will appear. And maybe 1 or 2 sort of rules will change here and there. But for the most part, your ultimate trading philosophy will remain the same. Okay, so that's kind of like a big picture look at your trading business plan. Let's look at individually what's going to go into that plan. So your trading business plan should include the following. It should include your goals. So as we just spoke about, what are you looking to achieve in the next 6 months? What are you looking to achieve in the next year? What are you looking to achieve in the next 3 years? 5 years, 10 years. Okay, so at least set yourself, some short-term goals, some medium-term goals, and some long-term goals. They need to be achievable goals, okay, but you can't make them ridiculously achievable either. So they need to be goals that give you something to work towards, and they're hard enough, or not hard enough, it's probably the wrong way to say things, but your ambitions are high enough that you're going to be pushed on to the next level, but they're not, you don't set your goals so high that you'll never be able to achieve them, so that you'll just always feel like a failure. You've got to find a fine balance between the two. Okay, so set realistic goals, set achievable goals, but remember that you can still reach for the stars. There's no problem in doing that. Your business plan should also include your system, so the rules on your system, how you're going to identify opportunities. What sort of market condition are you looking for? Are you looking for pullbacks to support and resistance line? What's going to trigger your trade? Are you going to use the range bar system, or are you going to use the price action system? What is it that's going to suit you? All of that kind of good stuff goes into the system part of your business plan. Then you want to talk about your money management. So how much are you willing to risk on any one trade? Are you going to risk 1%, 2%? What's your maximum amount of risk? So maybe you're trading 15 different pairs. Maybe you're doing it long term and trading 50 to 30 different pairs. Are you going to allow yourself to be in 10 different pairs at the same time? I highly doubt it. I wouldn't recommend it. So what are your rules for that? Okay, you put that into your money management part. Then your expected returns. Now you've got to be careful here. Okay, you don't want to end up trading from month to month trying to make a certain amount, because I've found personally when I try to do that, that affects my trading, because sometimes if I haven't made enough in a particular month and I start to take that sort of attitude, I start taking trades that don't exist just in a bid to try and achieve the target. And you know what, for the most part, I come unstuck and it ends up losing me money because I'm taking trades that don't really exist. Okay, they only exist in my mind because my mind wants me to achieve a certain result. So when I talk about expected returns, I'm talking about kind of projecting, saying I would like to be making 5 to 10% a month. If I'm making 5 to 10% a month, I consider myself to be profitable, obviously. I consider myself to be successful as well. That's sort of what I'm talking about, so that you can break it down and see where you need to be in order to be able to do this full time, in order to be able to do this for a living. Okay, because I'm assuming that a lot of you that are watching this probably aren't doing this for a living. But that's the dream. That's where you want to get to. So if you want to do this for a living, you need to know that that you'll need to cover, I don't know, let's say £5,000 a month or £2,000 a month. Wonderful, no problem. So if you want to achieve £2,000 a month, you're going to need a trading account that's of a good size. So you're going to need at least sort of, let's say £20,000 in your trading account as a minimum to be able to do 10% returns every month, to be able to make your expected returns. Okay, now if you're starting to trade with a £5,000 account, it's probably not that realistic. So what I'm saying here is just kind of, you can define your expected returns so you know where you've got to get to in terms of account size to be able to cover what it is that you want, what it is that you're expecting. And then finally, in your trading business plan, you need to cover your trading schedule. Now, this might sound like another funny one, but it's a very, very important one. Now, for those of you who run businesses or work for other people, just let me ask you one very quick question. Would it be okay with you if you're an employer, or with your boss if you're an employee, to just kind of turn up late some days, leave early other days, don't turn up at all on some days, and just generally do what you want? Just take a second there. Do you think that's going to be acceptable? I highly doubt it. So if that's not acceptable in the real world where you work in your job, then why do you think that's going to be acceptable from a trading perspective? You know, as a trader, you need to be consistent, and something as simple as having a trading schedule. So a time where you say, okay, from 9 till 10 o'clock every night, I'm going to check my charts. Something as simple as that. That's going to sort of ingrain a discipline in you, all right? So that you'll start to learn what it is and what it takes to be a successful trader. If you can't even stick to a trading schedule where you say, I'm going to trade from 9 till 10 every night, then how do you really expect to remain disciplined when you're actually in the trade and trade according to your plan? It won't happen. Okay, so your trading schedule from that perspective is very, very important. From the other perspective, if you want to, let's say for example, you want to be a day trader, you want to day trade the markets, but in your trading schedule it says that actually you can only trade from 7 till 9 or 10 o'clock at night, then really and truly you aren't going to be able to trade during the right times to make that a profitable way of trading. So instead of day trading, even though you'd love to do it, your trading schedule won't allow you to do it. So therefore, maybe you've got to look at doing something like swing trading, something a bit more sort of medium to longer term. All right, now there's nothing wrong with that. It can be just as profitable. All right, and sometimes it's better for new traders to start trading longer term charts because it gives them more time to think. All right, so to quickly summarize, your business plan should include your goals, your system, your money management, your expected returns, and your trading schedule. At the very, very least, that's what it needs to include. So now we've covered the trading business plan, let's go and take a look at your individual trade plan. Now your individual trading plan is a little bit simpler. It's just literally a plan about the very next trade you're going to take. And your individual trading plan is something that's going to keep you honest and hopefully keep you focused during the trade itself, because we are most rational when we don't have any money on the line whatsoever. When we're risking money, then we're trading our emotions. We're not trading the charts in front of us. So it's usually best to put down your plan for trading before you even get into the market. Okay, and if you can do that before you get into the market, you've got a much better chance of remaining disciplined once you're in there. Because even though your emotions may be saying, get out here, take profit early, move your stop loss, the market will turn back. You'll look at your trading plan and it will say to you, no, don't do that. That doesn't make any sense. Your plan when you didn't have any money on the table was this. So your plan now that you are in a trade has to also be this. Okay? So your individual trading plan should include things like the pair that you're going to trade, the direction that you want to trade it in, any technical reasons for taking a trade. So things like we're in a trending market, we've got lots of momentum to the upside, the market's pulling back to a previous level of resistance which is now acting as support. I want to take a candlestick reversal pattern from that particular level. That's the technical reason for taking a trade. Are there any fundamental reasons? They don't have to be, but if you've got some, that's always a bonus. So maybe, for example, the non-farm payrolls came out much worse than expected. So you're expecting the euro dollar to strengthen, the dollar to weaken against the euro. Okay, and then you've got technical reasons that back it up as well. Wonderful. Remember, even if you have fundamental reasons for a trade, we only enter technically. And the reason for that is that entering technically allows us to pinpoint our entry point and also control our losses a lot better. So it gives us technical levels where we can place our stop loss. Which brings me to the next point, your stop loss. You need to define your stop loss as well in your trading plan. Your take profit. So where would you like to take your position off the table if you're in profit? And lastly, any roadblocks or speed bumps in the way. Are there any other levels that's going to stop you from taking this trade? So for example, in our day trading system, we have a rule that says if the pivot point is within sort of 8 to 10 pips, if we're day trading, from our entry point, then we don't take the trade. We need at least X amount of pips to be able to take that trade, because we would consider that pivot point a roadblock. So you'd want to write that in your technical trading plan as well. Okay, so your individual plan is the pair you're trading, the direction you're trading in, technical reasons, fundamental reasons, your stop loss, your take profit, and any roadblocks. That's what needs to go into your individual trading plan. Okay, so now that we're okay with that, let's talk about your trading records. Now your trading records are very, very important. Your trading records help to keep you honest, first of all. So a lot of the times as human beings, we tend to hide things that make us look stupid or mistakes that we've made because we don't like to revisit them. Unfortunately, trading is one of those arenas where it's actually a very, very good thing to revisit the mistakes you've made, because you must learn from them. Otherwise, you're going to end up costing yourself a lot of money in this business if you can't learn from your mistakes. Okay, so by keeping records, you stay honest. You don't hide your mistakes, you write it down. So in 6 months' time or 6 weeks' time, you can come back and you can look at your trading records and you can say, oh yeah, that's an issue I had. I still tend to have it. I need to work harder on that next month, or yeah, I've done really well. I've managed to eliminate that issue from my trading, and it just gives you a little bit of a boost, So your trading records, they help to keep you honest. They're a central record for all of your trades that you've taken. They allow you, as I just said, to learn from your mistakes, but also, probably just importantly, to learn from your successes. You are going to have successes as a trader, and it's important to learn from those experiences so that you know what to do the next time. So the next time you see a trade that looks like the one that's you've just made some money from, you know that you can have confidence in taking it, okay? So your trading records aren't just like a record of all of the mistakes you've ever made. They're also a record of the successes that you've had, and you can learn from both of them. But they must be kept for every single trade. Now, you can't just sort of pick and choose which trades go into your trading record. Every single trade must be there, even the ones where you did something stupid, like click the wrong button or something like that. You know, you need to keep those particular records as well, because again, then you can see whether you're making a lot of those sorts of mistakes. Maybe it was a one-off, or maybe you do it all the time. If you do it all the time, then you know that you've got to do something to action it before you absolutely kill your account. And lastly, you need to keep optimized trading records in addition to your actual trading records. Now, your optimized trading records are records of the trades that you wouldn't have taken if you weren't too scared. They're records of the trades that you did take, but possibly in your actual records you took profit early. In the optimized records, you record where the market actually went to. Did it hit the profit target, or did it stop you out? You know, basically your optimized records are a separate set of records of your trades that you would have taken or that your system took, okay? But sometimes I can show a very, very different picture because they're the trades, or that's the version of the trades where you don't interfere with it, okay? So ultimately what that means is that let's say in 2 months' time after trading, maybe let's say you're down a couple of percent from your actual trading. But if you look at your optimized trading, you'll find that actually maybe I would have been up 5 or 10 or whatever percent, or maybe even just a couple of percent. But maybe you would have had better results than your actual trading, which for the most part is really what happens. And that again will kind of give you the push to say, I need to be more disciplined, because if I'd only just been more disciplined, I actually would have made money. I would have done well, okay? So you need to keep optimized trading records as well as your actual trading records, so you have something to compare it against. You know, sometimes your actual trading does better than your optimized. Fine, fair enough, no problem. Okay, but for the most part, it's going to be something that can show you where you're going wrong. And more often than not, where you're going wrong is within your own mind. So the things that should go in your optimized trading records are the pair that you're trading, the direction that you're trading in, your entry points, the stop loss, your profit targets, okay, your actual exits, your time and your date. And sorry, if I just mentioned what should go into your optimized trading records, this is what should go in both trading records, okay? So it's not just your optimized. In both of the trading records here, you need this sort of information in there. So you need the pair that you're going to trade, the direction you're going to trade in, your entry, your stop loss, your profit target, your actual exit, which is actually something that you'd put in your actual trading records, because your optimized ones won't have an actual exit, because your actual exit will be your profit target or your stop loss, because your optimized trading records are a version of your trading records where you don't make mistakes, okay? Then you'll want the time and the date that you got into the trade and the time and the date that you got out of the trade. And then you'd want another column, which isn't mentioned here, but you'd want another column for any comments on the trade. So anything that you may have learned from the trade. Maybe you rushed it. Maybe you noticed something which helped you out. Note it down. You need all of this stuff in your trading records, because it's going to be something that's going to help you improve as a trader over time. Okay? So in summary, documentation, unfortunately, is a very necessary evil of trading. We cannot get away from it. As much as we'd like to, there's nothing that we can do about it. If you want to be successful in this business, you have to learn to keep documentation. You know, I'm sorry if you don't like that, if you don't like what I'm saying, but it's just kind of, it's the way it is. And as I said to you at the beginning of the video, you know, we've found from our experience that the members that tend to be more successful at this are the ones that follow what we talk about here. They follow our advice here. They take it seriously. They start keeping their trading records, their trading plans, all of that good stuff, and they start to learn from it and they get better. Okay? And the traders that fail are those that don't keep records. There's a famous saying that failing to plan is planning to fail. That's ultimately what it is as a trader. If you plan your trades, if you go about it the right way, you put yourself in a much better position to be a success at this business than if you don't plan it at all. All right, so remember that trading is a business, and businesses do keep records. And just the art of keeping the record itself is something that will make you more disciplined as a human being, which will then trickle into your trading as well. So all of this stuff that we've talked about here, even though it doesn't directly impact your trading, you'll find that if you start to follow this process, in the long run, actually it does have an impact. Okay, not directly on the individual trade that you're taking, possibly. Well, your individual trading plan will, but from a discipline perspective is what I'm talking about here. If you can learn to keep records, if you can keep your trading plan, do all of that kind of good stuff, you will learn to be more disciplined. And being disciplined is what trading is all about. Okay? So I hope you enjoyed this video here. I hope you didn't find it too boring. I know it's not, about the system or about taking this trade or that trade, but believe me, it is really an important lesson, and it's one that you really should take note of. Go back over the video, download the slides, whatever it is, but please, please, please take the advice that we've given you on this video here. Okay? So thank you for watching, and until the next video, I look forward to speaking to you soon.